What is going on, Alpha Hunters? Hope everybody is doing well. No, not well. No, not well. Not well. Um, Terrific Tuesday. All right. Hopefully you are having a terrific Tuesday. I mean, if you're bullish, you're looking a little bit bullish on this pullback. You're looking pretty good today. We are seeing the market tick higher, but we're not seeing like crazy bullish activity. Nice little gap up today on the SPY. Nice little subtle pullback right into yesterday's close. So we did kind of just fill that gap up there a little bit. We didn't really have a huge gap up. Let's see, what did we have? Almost 0.2% of a gap up higher on the SPY. Then kind of ran into early lunchtime hour, and then kind of we're off the highs. We're not really at the highs, but we're just kind of in the middle range of the day. Nothing too crazy right now. Qs, as far as what's going on there, it did kind of have a little bit more of a sell down when the SPY had that pullback. So we'll look at a little bit more tech stuff. But yeah, we're seeing the Qs compared to a lot of the other markets out there. The Qs are still kind of lagging behind. There was an interesting piece of news that actually came out yesterday that I do want to look at, because that actually might have signaled the top on some tech stocks, in a big way, and I'm gonna kind of explain why. So, anyways, Qs a little bit more of the underperformance. IWM a little bit of the outperformance, kind of seeing a little bit of that continuation that we saw yesterday. Where we at? Okay, so we did take out the highs that we put back in mid-June. So it took us roughly a month to kind of break those highs. And we haven't really gotten above, though, these highs that we put in back in November, December. So, I mean, it's still just a kind of a spot here. I wouldn't want to be trying to be bullish or bearish. If you like really aggressive plays, you can maybe try a bearish. Man, that is a very aggressive play. But if you're trying to look to be bullish, I would wait, look for the breakout, and then pull back into 190 or so. Yeah, I would look for that kind of bullish play as it retests into this kind of level. And it might happen pretty quick. We might get like a 1 day pop, and then the next day it actually kind of retests into it. So that would be kind of my how I would look at that on the IWM there. Let's see, the DIA having a decent day there. Not bad, up over 0.5%. Looks like it's going to make its way and probably fill this gap from last week, from last Wednesday to Thursday. So, okay. This is SPY. Yeah, that's right. The SPY filled its gap. Q's filled its gap. IWM definitely filled its gap. Equal SP 500. Yeah, equal SP 500 filled its gap. Actually kind of breaking out here. Still has this long-term, not long-term, but this downtrend line that goes from the high that it put in with the back in late 2021, early 2022, and kind of the connection that it made back in February. So it's not out of the woods yet. It's still kind of in that downtrend. It is kind of breaking out here, so I would imagine a good scenario to probably be, as it probably continues to push higher, any kind of pullback now into about 150. I mean, you can see like all the tops. I'm just kind of putting my cursor right here at the 150 level. Let me just put a little line here. You can see like all the tops that we just got above. So it could be one of those that any kind of pullbacks now into the 150 area are going to be met with buyers and the continuation higher. So I would kind of be looking to play it that way now in the RSP. That looks pretty good. All right, so we'll get back to that news article thing. Let's go check sector rotation real quick, as I'd imagine tech stuff is going to be lagging behind. Should be lagging behind. Sector performance. All right, there we go. Energy is doing pretty good today. XLC communications are doing pretty good. There's Alphabet. Why does this keep moving so much? Meta's up quite a bit. Alphabet's up about 0.5%, but Meta's really what's helping XLC. What about T-Mobile's not doing too bad. Verizon's not doing too bad. Or not Verizon. AT&T's down 0.5%. Verizon's down almost 1%, not quite. So we got energies outperforming. We'll take a look at some energies. See how crude and gasoline and the stocks are doing. But yeah, communications looking pretty bullish today. Financials looking good. Industrials looking good. Real estate's doing well. Discretionaries are doing really good. Materials are doing pretty good. Utilities, a little bit of outperformance there. The three sectors that are underperforming the day: staples, tech, and healthcare. So yeah, not doing the best there. So without the gap, let's see how it's been going without the gap. So we can see without the gap just how well XLC communications there has really been performing. It did really good up until about noon Eastern time. But yeah, definitely outperforming the market today. Financials are doing pretty good. So materials are the one that's seeing the biggest kind of change. They go from an outperformance with the gap to without the gap underperformance. The other three sectors down there, staples, healthcare, and tech, they are all underperforming too. Everything else looks about right with the gap. Okay. All right. Well, fair enough. It's not looking horrible out there. I would just say tech just doesn't look all that fantastic. They're just not performing all that well. And then let's take a look here. IWM, yeah. Let me get off the 100, 200. Here we go. All right. So transport. Oh, man, look at transports. They're killing it. Transports are killing it. Jeez. It is very difficult to have any kind of downturn, like recession, with transports not. With transport performing pretty well. And, the past earnings cycle, they didn't perform all that well, but we'll see what happens this next earnings cycle. And this might be just a little premature. I mean, obviously, a lot of people are just probably looking at economic data and saying, hey, yeah, transport should be okay. Because they did get hit pretty good in the last earnings cycle. Federal Reserve balance sheet data, we'll get that Thursday after the bell. VIX, seeing the VIX come down a little bit more today. Obviously, we're going to have the big news tomorrow, CPI, tomorrow morning. We'll see what happens. Let me see. What are we expecting on the CPI? Core inflation rate year over year. 5 let's see. Forecast is for 5%. Prior was 5.3%. And that was a pretty good drop there. I do remember that. Oh, inflation rate expected to come down quite a bit. 3.1%. Prior was 4%. So this is where inflation rate is now starting to drop pretty heavily, but they need to get the core down. And that's the main thing that the Fed is watching right now, is the core. So, okay. Dollar up, dollar's falling off here. Yep, just gonna make a run down to 101. So we'll see how inflation kind of comes in. Maybe that reverses the dollar movement here. Over the past 3 days, it has definitely dropped off quite a bit. 10-year yields. It looks like it. I mean, it's just having some short-term pullback for now. That's all about the best thing we can say. 10 and 2 inversion. Nice little drop there. Yeah, that's about the best thing we can say. 10 and 2 drop pretty good. What is the 2-year doing? So the 2 year's not doing too much today. It's really just the 10 that's dropping pretty good. And that's why we're getting the inversion yield drop. Okay. GLD. Dollar's dropping off pretty good. You can see the difference here. Past 3-4 days, you can see the dollar's dropped off pretty good. Gold hasn't really done a whole lot. Like it's up over that time period, but it's not like screaming higher. So to me, it just seems like gold wants to probably just go lower. It probably just wants to go lower. Not a big deal. HYG, man, this thing has just been all over the place. LQD as well. So the LQD, what's interesting about this move here is the LQD actually filled this gap down that it had last Wednesday to Thursday. So it has filled that gap now. So I'll be curious to see which way it kind of goes now. I mean, HYG kind of pumping up there pretty good. And this thing's getting to where it's like it's just flatlining. And so it's having a hard time. We're just having a hard time in here figuring out which way it's going to go. So it's just making hugely wild moves here inside the weeks. LQD, yeah, that's a pretty good drop there on the LQD. If it doesn't get back above last week's open or high this week on the LQD, yeah, I would imagine it probably just sets up to keep rolling down. Same kind of deal there with the TLT as well. And the TLT is not even bouncing nearly as strong as the LQD. Especially today. Not nearly as strong. Okay. Checking out one of the largest stocks out there, AAPL, the largest stock out there in SP 500 at least. Not doing good. Opened a little bit higher, but it definitely didn't get as much as that bounce that the SPY and the Qs had. It is trading lower, and it is now breaking this downtrend. It is now breaking this downtrend pretty good now. So it's going to be hard to be bearish on it right here. If you're going to do anything like that, make sure you go out with plenty of time. I would look for some kind of pop though. Not a pop, but just maybe a bullish run over a couple days, maybe a week. And then I'd maybe like to take that bearish, especially if puts in a low here and then when it runs here a couple days and then it starts to roll over, then you have a very clear pivot point. If it takes that low out, then you can say, okay, I'm gonna take that bearish. But here's where I'm gonna go back to that article. That's very, very important. NASDAQ 100 is going to rebalance due to the Magnificent Seven dominance. And what they are talking about, the Magnificent Seven, is where are you? You can look at the NASDAQ composite, and it's pretty easy. You just pick the 7 largest stocks: Amazon, Tesla, Nvidia, Meta, Google, Microsoft, and AAPL. So those 7 stocks weigh so much on the NASDAQ, and you can see it here on the NASDAQ 100. Let me do this. Sector, no group. There we go. No group. Yeah, we can see here. AVGO is kind of mixed in there, but that's fine. So we can look here at these 8, and you can see these 8 stocks. We'll include AVGO are more than 50%, or more than 50% of the entire 100 here. So it's gotten too distorted, I guess. That's too lopsided. So yeah, even if you took AVGO out, you're probably still looking at 50% is of the weighting here. The NASDAQ 100 is done by the Magnificent Seven. So yeah, it is starting to be a little bit of a problem. But here's the thing: is let me bring up that article. Let me see if we can figure out what the date is. So Magnificent Apple, Tesla, Nvidia, Microsoft, Alphabet, Meta, and Amazon. Yep. So that's those 7. I've seen blah 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 blah. Yeah, this year they have been absolutely crazy. Oh, I don't want to have to listen to the video. Let me see if I can find an actual article. Stocks edge higher. Yeah, Microsoft Activision deal. There was a 5-day court case, and the FTC was basically trying to delay the closing, or try to take it to court, but they had to so it's a preliminary hearing, and basically the judge that heard that preliminary hearing were awarded in Microsoft's favor. And from kind of what I was keeping track of, it seemed like, yeah, Microsoft made the better arguments. Even some of the information from like Sony and Nvidia, it wasn't like strong enough. I'm trying. All right, let me see here. Nasdaq 100 balances has been great news for Cathie Wood's ARK innovation. We'll see. Market heavyweights dip ahead of Nasdaq 100 rebound. So this is what I want to see. So this is very important, right? This is very, very, very important. Nasdaq heavyweights dip, and I'm gonna tell you why. I'm gonna explain why. I guess I'm not gonna tell you anything, but over concentration. Let's see if they actually have the percentage here. Balance. That will drop to 1.1%, leaving its market cap. Blah. Close 3. Wall Street. Blah blah blah. While SP 500 Nvidia has surged 189%, Tesla's more than doubled. Microsoft, Amazon have climbed 30%, 51% in 2023. What? Come on. When is it going to happen? The announcement will be based on shares outstanding as of July 3rd, with changes announced on July 14th and taking effect before the market opens July 24th. So this is very important. You're going to see bearish activity and selling of these stocks. And I would imagine we see selling of these stocks this week, even though we're going to get the changes announced this week on July 14th. But here's the thing. You don't want to be the one left holding going into that announcement, which will be Friday. Changes are going to be announced Friday, and they are going to take effect the 24th, which will be not this next Monday, but the Monday after. So not the 17th. That's going to be this next week's Monday, but the Monday after, which is a big time earnings week. That's also the Fed week. It's going to be that July 24th. So yeah, this is a big deal, because what's going to wind up happening, and what you're seeing here with AAPL. Let's take a look across some of these bigger ones. Yeah, Microsoft's not even they're not seeing strength either. But what happens, okay, is there are large funds, there are large ETFs, there are large mutual funds that they all try to kind of mimic. Check out RK. Yeah, okay. RK, you can see here getting a little pump up. On, I guess, some of that news. That's kind of what they were referencing. I don't care one way or the other about ARK and Cathie Wood's Cathie Wood stocks, but the thing about it is all those funds that try to mimic these, the S&P 500, the NASDAQ total, the NASDAQ composite, and then the NASDAQ 100. These funds and different benchmarks, they all will rebalance their portfolios on this date, on July 24th. On July 24th. And guess what? We're going to find out this Friday is all of the stocks that are going to be changing. all the stocks that are going to be coming into the NASDAQ 100. And I don't know if it's the NASDAQ Composite or the NASDAQ 100. It said it would rebalance its NASDAQ 100 index. Okay, so it's going to rebalance the NASDAQ 100 index to address benchmarks over concentration. And so it is a situation where once they announce those changes of stocks that are coming out of the composite for rebalancing purposes, those stocks will get hit. Those stocks are going to get sold off, right? Because if all those funds that are trying to track the NASDAQ 100, they will be making those adjustments on July 24th, because that's when the benchmark is making its adjustments. So they're going to make their adjustments at the same time. And one of the things that you want to do is you want to sell before they start to sell, because they are going to have a lot of positions that they will close out. There are a lot of funds out there that track the NASDAQ 100 or those stocks in some cases. And so if you know there's going to be a lot of selling on July 24th, well, then I'm going to sell out of my positions beforehand, and I might just come back in and buy it up then on July 25th. Once they're all done selling, I might just close out my position before and then buy back in right after. That way I save myself, however much of dip it might be. Now, if you're running a major portfolio, are you really wanting to sell out of like your billions of dollars? Nah, maybe not. Maybe not. Not if you're running like $1 billion portfolio, you're probably not wanting to incur. That cost might be much more than what it's worth to do that. But if you're a smaller player, if you're looking for trades, this is going to be a pretty great opportunity. These are great opportunities. Whenever you see rebalancing going to happen on portfolios, market indices, that kind of stuff, that really does allow for some pretty good ways to kind of get into the market. So yeah, you're going to have a lot of major funds that will rebalance on that day. So you're going to get a lot of traders and other short-term players that are selling it beforehand and then buying it back after, as these guys sell out. So, yeah, that will be a big deal. But I can imagine that there's going to be a lot of these companies that are going to get sold. A lot of those top 7 stocks that are going to get sold this week as we go into Friday, because it's like, hey, I would actually rather sell it out now, take a shot on which ones are going to sell, because I would imagine whichever ones get announced that they are going to get sold, they are going to get hit a lot harder on Friday and Monday than the ones that don't get announced that they're going to get rebalanced. Then they get uplifted, right? So take for example, let's take a look at the NASDAQ 100. Let me get rid of put on no group. So let's say they are going to kick out Apple, Amazon, and Tesla. Let's say they kick out these 3. Okay, so let's just make it easy. Well, they'll kick out Apple, Alphabet, Google, Tesla. Okay, these 3. And they'll keep in Meta, Amazon, Nvidia, Microsoft, and they might do some other rebalancing. But let's say they kick out these 3, okay? And I don't even know where I was going with that. I don't even know where I was going with that. Oh, this is what I was going to say. So let's say they kick out Apple, Google, Tesla, Alphabet. All 3 of these guys would probably drop like 1.5%, maybe 2%, something like that. They're going to get hit, right? Because people are now going to start to sell those stocks before the major funds have to rebalance and they sell out of these three stocks. These four with Microsoft, Nvidia, Amazon, Meta, they're probably not going to get the uplift of 1.5%. I mean, they're already in the index. Like they're not going to get the uplift like the other ones that Apple, Alphabet, and Tesla would get hit. Right? These three would get hit a lot more than the others would get hit. So what you could actually do is place bearish positions on all of them. Okay, on all of them, and even AVGO. You don't know how they're going to rebalance it. They might do a little bit more rebalancing than just the Magnificent Seven. They've just mentioned Magnificent Seven has weighs so much, but they want to keep certain balancing and weights. So there might be more of a weighting that gets impacted here. So taking bearish positions on all of these is actually a really, really smart idea. And then once you find out that, hey, certain stocks are not going to be taken out of the index, you can just close those out Friday or this next Monday and probably presume that next week the ones that are going to get taken out of the market or out of the index, they probably will continue to see declines into that July 24th day. After that, the rebalancing is probably over, and I'd imagine you're probably going to get short covering or bearish covering come in. People probably scooping up after it's been sold off. But that's the other thing is if like you are looking to pick up maybe some of these stocks on pullbacks, I would be waiting maybe until July 24th, 25th. But that's also going to be earnings weekend, Fed week. That's so. I mean, it's not a bad idea to maybe wait because you're probably going to get some pretty good pullbacks here. Anyways, not a bad way to look at it. Maybe not a bad way to play it here over the next kind of few days. What is that? What is it? Oh, Lucid. I was like, what small company is that? Lucid. So AMAT. What's this one? Oh man, AMAT and LRCX are both getting hit pretty good. Anyways, that's just kind of an idea of what you could do with the news that they did give us about trading the rebalance there on the Nasdaq 100. So, but that's one reason why I think we might have seen possibly the market top out because we're going to see some selling, and now in some major tech names as well, in major tech names. So, anyways, let's go back. Microsoft. So we're seeing Microsoft a little bit lower today, a little bit of a lower move early on, and kind of a rally in the midday, a little bit sideways. Not doing crazy things. Alphabet. Kind of lower open, but traded higher, and it's been coming back down. Yeah, it's not looking good there for Alphabet. And then, how about Meta? Yeah, it's such a good spot to probably just be looking to be bearish on Meta. Okay. Nice push earlier, and then it's been coming back down a little bit. So Meta, Amazon, nice strong early open, been sideways coming back down as well. We looked at Nvidia. Nvidia looks like it's pretty much flat too. Yeah, flat, higher open, but it's coming back down. AMD's down pretty good. Tesla, let's go check out Tesla. Tesla, very choppy, trade lower today. You got nothing. A nice little bullish engulfing right here, but one white soldier there. Nice. I got nothing. The other thing about that little 5-minute candle right there, that actually did snag the low of the day. that it put in like, 45 minutes ago. But yeah, so that's kind of interesting. But yeah, that would be a pretty good idea going into the rest of this week, and even be looking for that going into next week. And probably my way to be playing it is probably vertical options. Kind of basically go out 2 weeks, whatever that two Fridays is. Not this Friday, not next Friday, but I guess 3 Fridays. Um, and just do vertical options just below our current level. Actually, you could do them for next Friday too. And then when we get to like next Friday or that Monday, I would say close them out. And then yeah, that wouldn't be all that bad. But yeah, that's that. I mean, that sparks up some selling that we'll see, and will the buying after it, after the rebalance happens on July 24th, will there be enough buying that comes in and it starts to lift them back higher? Because I mean, I haven't seen anything about the SPY doing the rebalance, so yeah, we might not. We might see the SPY kind of top out. Might see the Q's Nasdaq 100 kind of top out as well. Be curious to see kind of how they rebalance that indices. Producer manufacturer AMAT LRCX. So AMAT, nice drop off today. Stocks mostly higher. They got crushed for pretty much the first 2.5 hours. Okay, stocks mostly higher with lots of optimism, and they didn't really gap either. They just sold straight down. Applied Materials, Arizona State University team to set up materials to Fab Center. Materials to Fab Center. Okay. Okay. All right. And what was LRCX? LRCX. Lam Research down a little bit over 2.5%. Microsoft in the spotlight as tech layoffs roll on. Stocks mostly higher on optimism around Wednesday's U.S. CPI report. Stocks fall and bond yields rise on hawkish. Oh, that was 5 days ago. I don't care. Not much news there on Lam Research. Seems like some of the news is maybe around AMAT. AMD's getting hit pretty good today, down 3%. Stocks mostly higher in optimism around ahead of Wednesday's US CPI report. Okay. I think a pretty disastrous scenario actually for the market. Because you see here there we go. You can see here the inflation rate's coming down pretty good. And this is total inflation, this is not standalone core. But if we get a little bit of a bump up, um, that could be very interesting because the market's expecting it to come down to 3.1%, which is a pretty sharp drop. I mean, it's a pretty sharp drop. I'm gonna zoom out here and I mean, you see this waterfall drop off. It got to negative, and that's kind of what I mean. Once you start dropping inflation, that's the whole point. Is like it just drops so sharply. Sometimes it'll go to disinflationary environments or deflationary environments. So we'll see if they're able to stop it at 2%. I actually would have thought we would have gotten like negative. Well, okay, hold on. Let me go back to. So obviously, back in the Great Recession, we definitely did. Great financial crisis, we definitely did get under zero for a while on, and this is really kind of what they're wanting. They're wanting to really kind of crush valuations and price, a lot of price on things. So, all right. But yeah, if we do see an uptick in inflation, and the Fed goes ahead and raises rates again, which all expectations is they're going to be raising rates. So if they do that again, or I mean, and then we get like a month down the road, and we're just still seeing inflation just drop off again and again. You know, is it going to be one of those situations where they probably shouldn't have done it because inflation was already coming down so fast that it's just now starting to eat into economic activity, because if inflation keeps dropping that fast, I mean, then they're going to be at like maybe like deflationary kind of situation soon. I mean, we're still seeing a pretty good chance for a rate hike. I think rate hike's pretty much locked in, even if we do see it drop down to like 3%. I mean, I would have a hard time believing that it really changes them wanting to get the rates higher. Yeah, this is actually pretty good. Pretty good. I want to throw this in a Discord real quick. Um, give me 1 second. I'm gonna reply back to this. Someone was needing some help with someone. I'll get with them later. All right, there we go. There we go. Sorry about that. All right. Okay. So Apple sitting right around 3 trillion on market cap. Good for it. Anyways, that is a big deal. I know you don't realize that that's a big deal. That's a big deal because that kind of spurs in some selling that wasn't originally there. Honestly. Well, I wonder if they're gonna say. I wonder if this article would say what I just kind of talked about. Short seller Andrew Left is leaving in fear of the feds. AI is a game changer. 10 stocks could be winners. 6 that could be losers. Okay. All right. Let's see. Oh, McDonald's. Disney's doing pretty good. Let's go check out Disney. I know they're having struggles, man, but they have a lot of content. They still make a lot of money. Dude. Yeah. Oh yeah, crude oil. Let's check out them those energy stocks. Yeah, they've been moving pretty bullish for the past 2 weeks, looking pretty good. Crude oil moving higher. All right. Gasoline futures looking pretty good. All right. So Exxon looking pretty good. Chevron looking pretty good. ConocoPhillips looking pretty good. Yep, looking at this yesterday, looking like it was going to break above this little flat top here. Yeah, that's pretty good. I would say anything kind of pull back into that 106, 105 area is going to be definitely getting bought up now on ConocoPhillips. It's really kind of all right. Netflix, how's Netflix doing? Oh, Netflix was down earlier and got bought up. Okay. Yeah, not seeing crazy things. We're just seeing a lot of lagging. Eli Lilly breaking down, continuing the breakdown. All right. Eli Lilly. J&J. Some of these big pharmas getting hit today. And then Merck. Merck getting hit. Okay. And Procter Gamble. Ooh, Procter & Gamble's been getting hit. Okay. Pepsi. Pepsi. Sorry. Pepsi. Oh, Pepsi's got earnings here in like 2 days. When's Coke? Coke is the same week as all the tech. My goodness. If you want to announce bad earnings, announce it in the week of all the tech earnings. Nobody will notice. Pepsi, though. Yeah, Pepsi, we get earnings here in the next couple days. Okay. Pepsi looking pretty good there. PG. Procter Gamble, same week as a lot of the tech earnings. Well, MNST, Monster. Monster coming back down. Okay, down 2% or so. CVS is up pretty good today. Yep, there you go. Nice little pop. Still a huge downtrend there. Okay. HSY, Hershey's, down about 0.5%. Okay. What else? Nike's doing pretty good. Philip Morris is up about 0.5%. Yeah, Philip Morris is kind of doing okay today. And then Nike. All right, getting the buy up button today. They just announced earnings. Was that 2 weeks ago? Yeah, about 2 weeks ago. Okay. The thing with Nike though is it's kind of coming right into this bottom here. So this could be just a huge double top, broke down. Now it's just kind of retesting into that bottom, also filling this gap. It's not a horrible spot to be buying up. I mean, I can see it go either way. Just understand your timeline. I mean, I could definitely understand buying it up for positioning, like building a position. Good long term, maybe buying spot. If it breaks down some more, obviously you just keep buying it up. Financials are doing pretty good today. Let's see. Morgan Stanley. Yeah, Morgan Stanley's having a pretty good day, up 2%. Goldman Sachs up 1.3%. Nice. JP Morgan 1.5%. Nice. Yeah, nice move there on JP Morgan. Looks pretty good. Bank of America, nice upward move, about 1.25%. Okay. Wells Fargo up about 0.9% right now. So, okay. Let's see, what's the market doing? It's trying its best to move higher. It is definitely having a wait and see day tomorrow. Like tomorrow's the wait and see day. If we gap up tomorrow, watch out for the selling to come in. Texas Instruments. Texas Instruments moving sideways in here for a while. Yesterday's a nice strong move. Nice little lower retest today, but not the worst looking chart pattern. Allie, what do you expect tomorrow? Rally or dump? Everybody's calling for this like drop off and inflation data and stuff like that, and it's all good if it happens. But the problem is, I mean, when you have dropping inflation data, that basically just means you're strangling the economy, and so inflation data can keep dropping more and more and more, and then you get to the point where the economy is actually not growing. So that's kind of the fine line, it's trying to the soft landing type scenario that they keep trying to talk about. As far as tomorrow, honestly, I do think if we come down, it's going to come down to inflation data. If like inflation data drops off too hard, especially like what they're forecasting down to like 3.1%. So if we come in on the inflation data down at like 3.1% or so, maybe even 3.2 or less, like I could see the market open higher, but I think the market would get sold off. I think the market would get sold off pretty hard. Because, I mean, that just says like then the next month, and maybe what you're back down to like 2%, and then I don't know. Then what are you trying to do then? Trying to drop rates to kind of stabilize it at 2%? I don't know. I don't know what they would be doing at that point in time. But yeah, if core inflation's not really dropping off all that much, I mean they still might raise rates. I don't know. I don't really see a really strong pump type or rally type scenario. I could see a higher open, but I don't really see a situation where the market really just rips it higher. Just kind of my thoughts, I guess. But if inflation does come in at like 4%, or if it doesn't drop off, like if it comes in like 3.8% or higher, then it might. We actually might see the market get crushed tomorrow because that might lock in more. The rate odds for the end of July are at like 92% for a rate increase. So I don't know what it would take for the market to think that the Fed's not going to raise rates at the end of the month. That's the other thing. Is like I don't really know if there's a situation on inflation where they won't raise rates, and it's it kind of gets into a situation where, let's say inflation comes in at 3.4%. That's still lower. That's still trending lower. But is it enough to get them to take the basis point increase at the end of the month higher off the table? I don't think so. And then that gets into a point where, okay, well, you're strangling the economy to where inflation is coming down, but you're still raising rates. And that doesn't sound like a good scenario you want to be in, to where, you're strangling the economy, inflation's coming down, and you're still continuing to raise rates. I don't know. Doesn't sound like a great scenario for the economy or for equities. Honestly, it it just doesn't. And then then it gets in the situation of is the economy going to be able to withhold and handle all the rate increases that have been coming? I don't know. I don't know. I just have a hard time believing the market's going to continue just to grind higher. And honestly, the chart pattern that we kind of have here is it looks very much like it wants to continue higher. It takes one day though for it to drop off, but I mean this very much looks like it wants to continue higher. Where we had the breakout higher, we've had a little bit of a consolidation. I mean, it just looks like it wants to just continue higher. Yeah, it could be last push. Yeah, could be last push. I do know one thing. I mean, it's not good for the market now that tech stocks have a reason to get sold off with the Nasdaq 100 rebalancing. That's probably the most bearish news out there is this Nasdaq 100 rebalancing because you now get a lot of people that are going to sell out of these tech stocks. Where is it at? Yeah, this article. Market heavyweights dip ahead of Nasdaq 100 rebalancing. That's a big deal. No, it ain't gonna go to an all-time high. I don't believe it. I don't believe it. I fail to. I totally failed to believe that. I mean, it could happen. It could happen. I mean, it's a different. It would be different if that was to happen. There's too much politics involved in the market now. It is crazy. Um, Ever since really the '90s, I'm sure you can go back throughout history. You know, I'm I'm sure that people probably or politicians probably reference the market and whatever, but ever since the '90s, though, really with Bill Clinton, because Bill Clinton oversaw like one of the greatest bull runs ever, and I think his is now second to Obama's tenure while he was president on market performance. But because people oftentimes were referred to Bill Clinton's time as president of how well the market did back in the '90s, and we just go back and look at the '90s. I think he was president basically just before the SPY had started trading. Yeah, it was like '92 to 2000, and then George Bush took over. So basically, like Bill Clinton oversaw the 1990 and the .com bubble run up, and then George Bush came in like right at the bubble top, and then Barack Obama took over right here, right here in 2010, and saw this entire run into 28. No, 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 no. Hold up. Am I wrong on that? That gotta be wrong. Hold on. Oh, no, 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 no. Okay, so hold on. Yeah, I don't know. Hold on. One, two, three, four, five, six, seven. Yeah, it would have been 92. So 92 to 2000. And then what was Obama's? Yeah, Obama's had to be 2010. So 2010 to 2018. And then no, that doesn't make no, that's not right cuz 2016 was 2016 was the election. So that means, yeah, 2016 was the election for Trump. He took over in 2017. So Obama actually came in like right here at the bottom, um, at 2000 in 2009. Yeah, that's right. That's right. In 2009 was when Obama took office, and then he was there until the beginning of 20. He was there for 8 years, right? So that'd be, is that 2017? Yeah, so I guess it was 2017. Yeah, because he was elect. Yeah, the election was in 2016. That does, is that, yeah, and then 2017. There you go. And then, okay, so hold on. If I go back to this one, oh, this is when, okay, so hold on. So George Bush took office in 2001. It wasn't 2000. It won to, so it'd have been 1993 to like 2001. But anyways, so yeah, politicians, regardless, I mean, they've, ever since like the 1990s, they've always touted it. Even like, senators and representatives, they all tout the whole, hey, I was in office during this great economic expansion, even though honestly they don't really have shit to do with it. They do, but it's more of like the preceding um, politicians that kind of dictate, because it takes that long for economics to kind of change and policies to kind of change. But yeah, it's kind of, it is really annoying. It's all political now. They all do things to kind of continue to kind of spur along the market run up, and it's just so damn annoying. Like they all do it. Like um, Jerome Powell, he doesn't want to be known as the guy that saw like the market drop 20% under his tenure, right? I mean, nobody wants to be known as that guy. So obviously he doesn't want that to happen. The same thing with the Treasury, Janet Yellen. She doesn't want to be known as that person. So then it's all political, right? They all want to put that bullet point resume that, hey, under my time we saw the market run up like, you know, 60%, 70%, whatever it is. So, um, yeah, just kind of looking through the market. It seems like we might end on a high note today, and we'll see what happens though tomorrow with inflation data. And if we do open too high tomorrow, I could see the market getting sold off if we do have a pretty nice solid open higher. Will we have an open higher? I can't say we do or don't. I just know that I'm not really wanting to be bullish right now, so that's why I'm kind of just more sitting on the sidelines. So we'll see October lows this year. I don't think it happens this year. I don't think it happens this year. It's possible. It's possible. It needs to start happening here like very very soon if we're going to start rolling over. It's possible. There's two scenarios. One, we have a pretty strong meltdown over the next 3-4 months, and we possibly get back down there. So maybe by like October, November, maybe we get back down there, and that's possible. But we got to start seeing some selling soon, especially as we go further into July. We got to start to see some sell down. The other scenario is we do start to sell down. Then when we get to 2024, maybe like January, February, we kind of break these lows early next year, and then we start kind of like a new bull market at that scenario. Those are my two scenarios. I'm not really one to. I don't like the bull market or the bullish run we're having now. I just don't. There's not much I like about it. Not much I like about it. Just don't. Anyways, Outfunders, I'm out of here. Great. Have a great rest of your day. We'll see what happens tomorrow with inflation data, and that's gonna be the big one. Looking at core, we're looking for year-over-year increase for core. The forecast is for 5%, so we'll see what that comes in at. And then year-over-year for total inflation is expected to come in at 3.1%. Either one of those comes in much higher, especially total inflation. If total inflation comes in much higher, Yeah, we might not see the market really open higher, and we might start to see the market kind of sell off as it would solidify a definitely another rate hike, and it's not coming down as hard. So it might be more rate hikes. The market might start to price in more rate hikes. So I mean, we'll see. Well, hunters, have a great rest of your day. Take care.